we are talking about the cash generated units. Okay, what is the cash? This will be given. Is it very simple? This will be for 4 marks maximum. Okay, this will be for 4 marks maximum. What is the cash? See what happens. First I will tell you. You are doing the business. Okay, when you are doing the business, definitely there will be so many small units will be there. Okay, small units will be there. Is that you are doing so many different products will be there. Assume Apple is Apple product is Apple brand is selling so many things. Okay, they are selling the phones, they are selling the MacBook. Is it right? They are selling the accessories. Is it right? They are selling the accessories. They are selling the covers. Is it right? They are selling the service. They are selling so many things. Somehow one unit will not work. The concept is when you are working with a business, you have to divide the business into a small units. It is easy to manage. And it is easy to manage, and listen carefully. If tomorrow this one unit is not working, you can discontinue this unit very easily without having an impact on other units. Okay, without having an impact on other units. That's very important. Okay, that's very important. Otherwise, what will happen? It should not. One unit is closing down. It should not. It will have impact on other units. Other units also suffer. No, that is the reason. A cash generated unit. I am doing this. We have to distribute into small units, and it will help us whenever there is a discontinued operation. Now, when there is a discontinued operation, what happens to you? The assets. There are 3 types of assets will be there. The assets is intangible assets. What we have done? The assets will be your non-current assets, and the assets will be current assets. Is that the 3 classifications are there? Is that one is the non-intangible asset. Now, a loss-making unit. Okay, a loss-making unit. Loss-making unit, first thing what it will go off, the first thing it will go off is the goodwill. Goodwill will become 0 first. Is it right? A loss-making unit, goodwill will become 0. Next, current assets. Current assets will remain same. The value of current assets will remain. Cash will be cash only. You cannot say that I am having 50,000 reals cash and I will put it as 45,000. No, 50,000 will be 50,000. Cash, current assets will never change. Specific current assets. The only thing what happens whenever there is a loss, okay, whenever there is a loss, you have to distribute this loss to the non-current assets. Understand? 3 steps are there. Understand this. It will, your 4 marks is on your fingertips. When I am telling you on recording, I am telling with that much assurance. Is it? First, what it says, when assessing the impairment is loss in value. It not always be possible to base on individual assets. It's not possible. Impairment. What is the impairment? You cannot say that impairment is happening with other assets. The moment you divide, okay, you divide accessories. In accessories also, I am telling you very clearly. In accessories also, nowadays what's happening? You are having that pin will be separate, the cable will be separate. Is it there or not? The socket will be separate, the cable will be separate. Some people will ask only the cable. Cable will be more saleable. Socket will not be more saleable because cable will get damaged. The demand for cable will increase. The cable unit will be separate. The socket unit will be separate, manufacturing unit. Anything happens to the cable unit, we have to think about that. Okay, that is what impairment talks. We have to divide the unit. The value in use. You know what is the value in use? Tell me fast. Hussein.
Yes,
whatever you understand, tell me.
The value of who use it?
Value in use is called as?
The actual value?
No, value in use is what called as what is the expected future. Is it right? Expected future cash inflows and cash outflows. Is that expected future cash inflows and cash outflows? Read again once, everyone. Everyone read what is value in use. If you are saying if you are using the asset, what will be the expected cash inflows, future cash inflows and outflows? I will go back for your understanding. Very important. You should not miss this one. Where we have done see, value in use is determined by estimating future cash inflows and outflows to be derived from the use of the asset and its ultimate disposal, applying the suitable discount rate to these cash flows. Is there value in use? I will not say value in use like that. Is there? The value in use is nothing but estimating the future cash inflows and outflows, use of the asset with the help of a discount rate. Is that very important? Is that this is the advantage you will have here? Okay. Now what it says, where are we? Here. Is that the value in use calculations may be impossible on a single asset. It is little bit difficult because individual assets, one asset will not generate. Okay, one asset will not generate everything. Is that when you are saying when you are saying that you are talking about the asset, you are talking about a business unit. Is that you are talking about the business unit? When you say it's a business unit, sometimes what will happen? How I can give the example of this? Take the thing. Take the example of a coffee shop. Is it coffee shop? Coffee shop only the people are there. Now the tea corners are there. Lot of things. Is it? You cannot sell only tea. What you are selling? You will sell with tea. You have to sell with water also. Some people will say that with tea in the coffee shop you will have that soft drinks also. Is that you have fresh juice also? Is that you have fresh juice also? You take the Baskin Robbins. I will give these examples. Okay, Baskin Robbins. They are not only selling the ice cream. Okay, they are not only selling the ice cream. What they are selling? They are selling cakes also. Is that they are selling the cakes also? Means only one product we are not selling. We cannot say that one product will give us the revenue. Is it right? That is what it says. It is impossible on a single asset because individual asset does not generate a distinguishable cash flow. In this case, what will happen? Any loss in value, impairment, should be based on the concept of cash generating unit. I will ask you this next week. You have to be, I'm not saying that you are, remember when I'm explaining you, I will repeat more than once. Okay, cash generated. What is the cash generated? A smallest identifiable group of assets that generate cash inflows that are largely independent. That is largely independent of the cash inflow from other assets. A smallest identifiable group of assets. the smallest unit which can generate cash flows independently, is it, with respect to other assets. Now I will say, now if I say that, is it, I will give the example of this. You take the things, you are talking about the tea, you are talking about the water, you are talking about the fresh juice, is it, you are talking in terms of concentrated drinks, okay, you are talking about the concentrated drinks. Just imagine what are the things coffee shop is selling to you. You will understand. They are selling multiple. They will not only selling one product, they will sell multiple products. Is that any business? Now you go a bigger version. You are talking about Omantel. Omantel is not selling only one product, multiple products. Bank is selling not one product, multiple products, multiple services. Okay, multiple services. That is one, you are taking one service which is going to be generated independently. It is called as a cash generated unit. In a restaurant, do you see the thing? The same example there. The smallest group of assets might be assets within a single restaurant. Smallest restaurant, you are not selling one product, you are selling different products. You are selling very simple. I would say you will have breakfast, you will have lunch, you have dinner. Is it? Your breakfast generates separate revenue, lunch will generate, and dinner will generate. This is the classification you have to do. But for the mining company, all the assets company might take a single cash generating unit. You take the thing, mining company, you take an oil company, the oil exploration company. Is it? Oil exploration. See, you are putting so many assets in coordination, then only you can extract oil. Yeah, putting so many assets, is it? It's not one asset. You have so many resources. I will put like this. You are so many resources, and you are generating one output. Is it? But for the mining company, all the assets of the company might make up a single cash generated unit. Okay? Concept is clear. What is the cash generated unit? A smallest identified group of assets which will generate cash individually. It says what is the impairment? Value of the asset will decrease. Okay? Value of the asset is decreased. How we will calculate? I told you 3 steps. Whenever value of the assets will decrease. Okay? I am putting this here again on the right hand side. Okay? On the right hand side. Whenever the value of the asset will decrease. First you have to reduce the value of intangible assets. Then you have to divide it among the non-current assets. And current assets value will remain same. Cash value will not decrease, never. Okay, cash value, only thing is, if it is a loss making unit, our goodwill will go down. Okay, now the company is calculated by assuming cash generated unit in one asset. You will have questions, calculation questions will be there on this. Okay, comparing the carrying amount. What is the carrying amount? Salim. What is the carrying amount formula?
Cost minus depreciation.
Cost minus depreciation. Is it? Of the cash generated unit to the, always we say recoverable amount. What will calculate? What is the impairment? Again I am saying, what is the impairment? You will take carrying amount. You will take recoverable amount. Is it right? You will take recoverable amount. This is part of revision. Okay. You will take the value in use. Is it right? You will take the value in whichever is greater. We will take that value. Okay. Carrying amount is more than recoverable amount and value in use. Then it is a impairment. Is that carrying amount of CGU? Carrying amount of all assets in CGU. First, what will do? You will add all the assets. Is it? Carrying amount of all the assets should be greater than recoverable amount. Okay? Carrying amount is greater than recoverable amount. Then only it is going to lead us to the impairment. Okay? As previously, impairment exists when carrying amount exceeds recoverable amount. Is that carrying amount is more, is that 10,000, recoverable amount is 7,500. Then there is a impairment 2,500. Is that deal with, again there is small revision they are doing, okay, deal with any specifically impaired assets first, then impaired CGU. IS 36 requires that impairment loss attribute to CGU should be allocated, should be distributed to write down the assets in the following order. You just remember these steps. Understand, boy? You just remember these steps. Two things you have to remember. What is the definition of cash generated unit and how we are going to calculate the calculation of cash generated unit. Is that first in the following order? What we have to do with what? Purchased goodwill, not internal generated goodwill. Internal generated goodwill is not recognized. It should be there in your mind. No second thinking will be there. Okay? If it is against a purchased goodwill, other assets, including other intangible assets, if any, trademarks, patents in the CGU, on a pro rata basis. Pro rata means on the weighted basis. I will tell you this. Based on the carrying amount of each of the assets. First you have to take the goodwill, then you have to take any other intangible assets if exist, then we have to distribute it accordingly. Okay? No individual asset should be written down below its recoverable amount. Condition, recoverable amount. Is it right? If you are saying that the recoverable amount is recoverable amount, I will write recoverable amount. Recoverable amount is 3,000. Okay, recoverable amount is 3,000. Maximum you can use 3,000. That's all. Okay, maximum you can use 3,000. You cannot say that I will use more than 3,000. No, is it maximum? That is a recoverable amount. That much amount you are recovering, that much resources you are having. Is it right? You cannot reduce the loss more than 3,000. Is it right? This means that unless specifically told, current assets are unlikely to be impaired. Current assets are unlikely to be impaired means current assets will not, the value of current assets will not decrease, as they have already likely to be carried on the recoverable amount. Is it current assets value? See, cash, you are having cash, is it right? You are having cash at 10,000. Fine. You are not using cash for first year. Balance will be 10,000. Not using second year. Balance will be 10,000. They cannot say that you have not used the cash for 1 year. The cash bank people will never say that the balance is going to be 9,500. Is it? That means what is the message is happening here? First you have to think about the purchase of goodwill. Second, you have to think in terms of any intangible assets. The third, we are thinking in terms of any current assets value will not differ. See the thing. Inventory is, as noted, is outside the scope. If you are talking about the current assets, don't include inventory. Don't include inventory. Okay? This is what it says. Now you are understanding. Now the moment we will do this, you will understand very clearly. Is that what it says? SEP company runs a unit that suffers a massive drop in income due to failure of technology. When it happens on 1st January 2008. The following carrying amount, these are the carrying amount. Goodwill is there, technology is there, Is it? Brand is, see the thing, goodwill is there, technology is there. Technology is intangible asset. Brand is an intangible asset. Land is there, buildings is there, net assets is there. The recoverable amount is how much? The recoverable amount is 85. The technology is worthless. The technology is worthless means the technology value will be how much? 0. Following the complete failure. The other assets includes inventory and receivables. It is considered that the carrying amount of net assets is reasonable with respect to net realizable value. Again, I will read the question. Okay, one question you are doing, you have to do the second question on your own. They have decreased the sales. They have immediately they have these are the carrying amounts: goodwill, technology, brand, land, buildings. Other assets are other assets include inventory and receivables. It is considered that it represents the reasonable amount of net realizable value. Fine. Now, what we have to do? The steps is a slowly. I will put it as step 1. Okay, step 1 or working 1. Okay, step 1 or working. First, you should know how much is the carrying. What you are doing here? We are calculating the impaired value. Is it? We are calculating what? What is the value has been decreased? Okay. What is the value has been decreased? You will have 4 columns. The first one is particulars. Is it? The first one is particulars. The second one is carrying amount. The second one is carrying amount. The third one is impairment. And the fourth one is impaired value. This will not change. Okay. This will not change. Particulars. Take the things what they have been given. How much is the goodwill they have given? How much is the goodwill? 20. Okay. Take the things as it is. Okay. Take the things as it is. Technology is there. What is the carrying amount of technology? 5. Okay. What is the carrying amount? The brands. Okay. What is the carrying amount of the brands? Is it? Brands is how much? Brands is 10. Okay. Brands is 10. Next. How much is the land? Land is 50. Okay. Are you here with me?
Yes, Doctor.
Okay. 30. Other net assets. Now, is that other net assets? They have mentioned very clearly in the beginning. What they have mentioned in the beginning, they say that technology is worthless. Okay, technology is worthless. Technology has no value. Okay, technology has no value. Means we have to take technology is how much? 0. Is that technology has no value? Okay, technology has no value. We have to take it as 0. Fine. Are you clear about this? Other net assets are how much? Other net assets are 40. Other net assets are 40. How much is there? Now you calculate it. What is the total of this? Tell me fast.
$150.
How much? 150. Next, how much is the recoverable amount? Recoverable amount of the unit, how much you are recovering?
85.
85. Now, what is the impairment? Impairment is equal to, is it right? Impairment is equal to carrying amount. Is it right? Carrying amount. Carrying amount is how much? 150. Okay. Minus. Recoverable amount is how much? Recoverable amount is how much? Recoverable amount is 85. Yes?
Five.
Is right? The difference between carrying amount and recoverable amount is that how much is there? 65. It is right. This is called as impairment loss. How much is the impairment? 65. Is it okay with you? Is it fine? Impairment is how much? 65. Are you clear about this?
Yes.
Fine. Slowly and steadily. Remember the steps. Steps will not change. Okay, steps will not change. Now, first, what will happen is that first what will happen is the total. How much is there? It is 65. First, you have to allocate to goodwill. Okay, first you have to allocate the goodwill. Now this 65 you have to distribute. Okay, this 65 you have to distribute. See, I will tell you the thing. First, goodwill will become 0. Is it? First, the thing is, it will affect whom? It will affect goodwill. Is it? It will affect goodwill immediately. Okay, first goodwill, your goodwill will have, it will affect goodwill, purchase goodwill. Okay, it is 0. Fine, your goodwill will go down. Next, the second thing is your other net assets. Okay, other net assets will not depreciate. That is the rule. Is that first you have to work on the goodwill. The second, you have to make sure that your other assets will never ever reduce in value. Okay, never ever reduce in value. Now, what is the impairment loss? Impairment loss is how much? Impairment loss is how much? 65. Okay, what we have taken out? We have taken out what? We have taken out goodwill. How much you have taken out goodwill? 20. How much is the remaining? 45. Okay, how much you are remaining? 45. Now you see the thing. Is it? You see the thing. We have taken goodwill. Technology doesn't have any value. Other assets are 40. Now this 45 should be distributed among whom? Brands, land and buildings, and land and buildings. What they have said very clearly, they are saying that it has to be done on a pro rata basis. Where they have mentioned that? They have mentioned here. Okay, this has to be the other assets, including other intangible assets in the CGU on a pro rata basis. On a pro rata basis of the carrying amount. Is it? On a pro rata basis of the carrying amount. Now, what is the total of these three? Brands, land and buildings, and this one? How much is the total? 30 plus 80 plus 90. Are you clear about this? I will write here. Is that how much is there? The total of these three. The total of threes is how much? 90. Is it okay with you?
Why, Doctor, we add the three of them?
Yeah. Why we have to add 3? See, what is left over with us? It is a what is left over. See, goodwill, first we have to reduce goodwill. Second, technology value is 0. Non other assets, current assets value will never change. First, what we have done, we have to reduce the value of goodwill, minus 20. See, any loss, immediately it will affect your goodwill, isn't it? It will affect your goodwill. Goodwill becomes 0. Okay? Technology doesn't have any value, already they have said. Is it? Technology have no. Current assets will not change, always. Okay? Excluding inventory. Excluding inventory, unless until they specify specifically. Current assets value will never change. This is the first thing that you have to keep in your mind. Is that first what you have to do? You have to take the carrying amount, isn't it? Then you have to calculate the impairment loss, isn't it? You have calculated impairment. How much impairment loss is there? 65. Now 65 is the loss. First what you have to deduct? You have to deduct the goodwill. Okay? You have to deduct the goodwill. First is you have to hit the goodwill. Is that? You will get the balance amount. This balance amount you have to distribute in the pro rata basis. Is it pro rata basis? How much is the pro rata basis? Total is how much? 90. Is it okay, Hussein?
Yes, Doctor.
Okay. Now, see the thing. What is the share of brand? What is the share of land? And what is the share of buildings in this 45? Okay. How much is the value of brand? Is that what is the value of brand? Is that what is the value of brand? Brand is, see the things. Okay. I am putting brand is how much? Brand is that how we have to calculate the value, brand value, is that brand value times, is it right? Impairment, is it right? Brand value times impairment, we put like this, no, sorry, okay, is it? Impairment loss, is it right? Impairment loss times, you don't need to write this formula, but by practice you will get it. Okay, impairment loss, we are doing for a brand value minus the total what we can say, the total value of all assets, is a total value of assets. Okay, total value of the remaining assets. I will put like this. You will not get, is a remaining assets. Now, what is there? How much is the impairment loss? Impairment loss is 45. Brand value is how much? 10. Total value is how much? 90. How much you will get? Fast.
5.
Huh?
5.
How much you will get? Whatever it may be. It gets how much?
5.
5. Means brand value is decreasing how much? Brand value is decreasing by 5. The share of impairment loss. The share of impairment loss in brand is how much? The share of impairment loss in brand is how much? It is 5. Is that? I will write very clearly. The share of impairment loss in brand value. Brand value will decrease by how much? Brand value will decrease by 5. Impairment will be how much? 5. Okay? Impairment will be how much? 5. I will put this for your understanding. Okay? From where you got this, you will got from here. Okay? Now, how much is the impaired value? Now it comes to what is the balance? Balance is 5. Okay? For, I will say, this is column 1, this is column 2, this is column 3, this is column 4. Column 4 is 2 minus 3. How much the value of branding, share of impairment? You should not, is it? You have to share based on the weight. Now you will tell on your own. You don't need my help also. Tell me, Salim, what about land?
Now we have to take the land value, it is 50,
Yes.
divided by 90,
Good.
multiplied by 45.
Good. How much you will get?
25.
25. What is the value of land has been decreased? 25. 2 minus 3, how much? 25. Next, Sumaya, tell me buildings.
30.
30,
Okay. Divide by 90.
30
Multiply-
divided by
Forty.
90, good,
Multiply for 45.
good. How much you will get?
15.
Good. Minus, it comes to how much? 50. Total is how much? Column 3 total is how much?
45.
20 plus 5. Where is 20? 20 is there. Goodwill 20 is there. 20 plus 5. Total how much impairment?
65.
65. And what is the impaired value? Last column. 40, 40, 40, 80, 40, 15, 60, 55, 80 and 85.
85.
85.
Are you clear about this? I am asking everyone.
Yes.
Okay, simple one. Okay, simple one. See, I will tell you where there is we can score marks easily also. Is that? I will not. We cannot say that every other thing will be easy, but some topics are there where you can score marks easily. I will not say score marks easily. Again, you don't need that much effort while revision in these topics because you already know it is simple way. Okay. Now, are you clear about this? This is the way you have to do. Now, make it a point that whenever you are doing this, you have to justify with general entries. General entries is the lifeline. Okay, general entries is the lifeline. We cannot skip. They will not ask, but you have to write. Is it? How much is the what happens? What happens? There are two things happen. The technology is 0. Is it right? Technology is 0. Is it? Technology is 0. Is that? Technology is an asset. Debit, asset is a debit. If asset increases, if asset is increasing, it should be debit. If asset is decreasing, it should be credit. Okay. First, you have to write about technology. It is a loss. Okay. It is a loss. Impairment loss. Okay. Impairment loss. Debit all expenses and losses. Is it? I will put this. I will do debit all expenses and losses always. This is the rule of nominal account. Okay. Debit impairment. Is it? Impairment of technology. Is it? How much impairment of technology? 5. Asset is decreasing. Is it? Asset decreases, it is credit. Credit will be what? Credit will be technology. 5.
Doctor,
Yes.
sorry, can I leave because I have an emergency thing?
Yeah. Who is this?
Sorry.
Okay.
I will check the recording later.
Okay. Okay. But once it is over, I will post the videos. I will post the videos 2.6, 2.7, 2.8 and 2.9. I will complete lecture 2 today. And please download by tomorrow. Okay, please.
But this lecture will be downloaded today because I want to check the rest of the lecture.
Okay, okay. I will give preference to this. Okay, I will give preference to this. Okay, no problem. Just you remind me if I am missing. Okay, inshallah it will be there in my mind. Fine. Technology. See what happens. See, this is what whenever they see without general entry nothing will happen. Okay, without general entry we cannot debit impairment. Why impairment? It is a loss. Debit all expenses and losses. Credit is your asset is decreasing. Okay, credit your asset is decreasing. Asset is becoming zero. Is it that? If asset decreases, it will be on the credit side. Fine. This is the first one. Now this is point A. What is the point B? Point B we have to write for impairment also. Is it impairment of other assets? How much is their impairment of other assets? How much is the loss? Debit will be what? Debit will be impairment. Is it? Debit will be what? Impairment expenses. Okay. Debit will be what? How much? Impairment expense. How much impairment expenses? 65. Okay. 65 million. Now you are reducing it one by one. Okay. Credit. First what you are reducing? You are reducing goodwill. How much you are reducing goodwill? 20 million. Is that? Asset is decreasing. What you are reducing? You are reducing brand. How much you are reducing? 5 million. Is that? Credit. You are reducing what? Land. How much you are reducing land? 25. Is that? Or 25. Next, you are reducing what? You are reducing buildings. Is that how much you are reducing buildings? You are reducing buildings by 15. Is it clear to you?
Yeah, clear, doctor.
Yes, Hussein. Sumaya.
This doctor is clear.
Is it? Now, remember this is the first question we are doing. This is the first question we are doing. Understand the concept, okay? First you have to write down the carrying amount. Then we have to take the recoverable amount. You will have the impairment loss, okay? Now, impairment loss will be there. First what you have to do? We have to take the goodwill. Goodwill we have to target first. You have to make goodwill 0. Next, current assets will remain same. We should not touch current assets. Whatever the remaining, take the total. We have to distribute with the total and reduce that amount and write the general entries. Okay, these are the steps. Now, you will do the second problem on your own. Is it? You will do the second problem on your own. What they are saying? They gave you the impairment of assets. They gave you the income statement, trial balance as such. Okay, they gave you the trial balance as such. Now, what they are asking is, they have given some notes to you. Okay, they have given some notes to you. What is the notes they have given? Property land is how much? 30,000. Cost is how much? 30,000. The building is depreciated on a straight line basis for 25 years. Plant and equipment depreciated, reducing balance 20%. Okay, 20%. Next, anything else they say? They see the thing. The balance on plant and equipment, is it? The balance on plant and equipment. How much is the cost? Cost is 70,000. Cost is 70,000 on 1st July. 30th June means how many, after how many years? 2 years. The 2 year, after 2 years, June 2007, that they have some severe damage happened and they want to sell the machine. Okay, keep it in one. We will just wait for a while. Okay, we'll do separately. While doing, we will go in detail. There is something related to the machine. There is something related to the repairs. All depreciation is charged on cost of sales. The directors estimated a provision for income tax. How much? 6,500. Prepare the statement of profit and loss account and statement of financial position. Nothing but this is going to be a 20 marks question. They will not give this much, but this is the part of. Now what they are doing? They are clubbing the financial statements with the impairment. Is that they are clubbing financial statements with the impairment. Now, so I will take as slowly as possible. Is it right? Now, what they have mentioned, they have said that the all depreciation is this much. The financial controller estimated present value is future value in use is 31,800. Okay, 31,800. The balance is this much. Now, what they have said. The property includes land at cost, building straight line method, plant and machinery is depreciated, reducing balance. Okay, plant and machinery reducing balance. Anything they have mentioned? All depreciation is related to what? Cost of sales. Is it right? All depreciation is related to cost of sales. Fine. All depreciation is related to cost of sales. How much is the cost of depreciation? First we will see. First what we have to do? They are asking us to prepare the income statement. Okay, they are asking us to prepare the income statement and profit and loss account, and they are asking us to prepare the profit and loss account and statement of financial position. Okay, we will do wherever time is over, we will stop. We will not rush. Okay, we will not rush. Next we will continue in next session. Okay, next we are going to continue in next session. Okay, because it takes lot of things. You have revenue. Okay, you have revenue. You have cost of sales. In the cost of, see, I will put like this. Is it right? I will write like this. Okay, statement of profit. Is it right? Statement of profit or loss for the year ended. How much? Year ended 30th June 2007. Particulars, amount. Are you writing, everyone? Who is not writing? Tell me very fairly.
Yes, doctor, we are writing.
Hussein writing?
This one still.
Please write. Okay. Sumaya writing?
Yes, doctor.
Please. Okay. Now, fine. Revenue. You don't see first revenue. See, any adjustment is given for revenue. Any adjustment is, it is a simple balance sheet. Okay. It is a revision we are doing. Is that revenue? Anything is there, 0.1, nothing. 0.2, depreciation. 0.3, they are talking about the cost and other things. 0.3, 0.1, they are talking about repairs, all those things. 3.2, repairs to the machine. Is it financial estimate, present values, future cash flows. 0.4, depreciation. It is related to cost of sales. 0.5 is income tax. We don't have anything. If there is anything is there, just you stop me. Okay. How much is the revenue? Revenue is 390. Is it? Revenue is 390. Next, cost of sales. You have cost of sales. Depreciation is there. Is it right? You have cost of sales. Depreciation is there. Fine. When you have depreciation, you should know what is the depreciation, how much is that? Cost of sales. Working one. Okay. Working one. Okay. Working one. First you have to calculate depreciation. Is it right? Here we are putting this. Is that little bit lengthy, little bit slowly I am doing. Okay. First one is we have to take what? We have to take the cost of sales. Is that cost of sales? Given in trial balance. How much is given in trial balance in a question? How much is cost of sales in trial balance?
210, 600.
210, 60. Is it right? 210, 600. Okay. Now. Okay. Now. Depreciation. Okay. Depreciation. It is a very one. Okay. Depreciation. I will put working 2. Okay. I will put working 2. It needs depreciation because they have various so many things are there. Okay. Depreciation. Where we have to calculate depreciation. We have to calculate depreciation on this. We have to calculate depreciation on this. Okay. We have to. What is the method? On property, the method is straight line method. Okay. Property, the method is straight line method. Whereas on the plant and machinery, it is reducing balance method. Is it return down reducing balance method? Is it right? Reducing return down value or WDV. Okay, 20%. Okay, 20%. Fine. Now, okay. Fine. Here only I am writing. Okay. Working 3. Depreciation. Working 3. Depreciation. Okay. What is there? You have 2 assets. Is it right? You have properties there. Is it right? You have properties there. You have plant and equipment. Any doubt? Stop me. Okay. Any doubt? Stop me. Is that given? Is it cost? Cost given in trial balance. Is it right? Given in trial balance. How much is the cost? 150, 176, 200. Okay, 150, 176, 200. Okay, 150, 76, 200. Is it? They have done accumulated depreciation. Is that? They have done accumulated depreciation. 36,400 and 48,600. Okay, less accumulated depreciation. Is it? 30. How much is there? 38,400. 38,400 and here it is how much? 48,600. Okay, 48,600. Fine. Next. Next. Current year depreciation is how much? Current year depreciation, this is straight line method. This is written down value method. Okay, at the rate of 20%. Is it? This is the written down value method at the rate of 20%. What is the current year depreciation? Tell me. What is the current year depreciation? Property will be how much? Property will be how much? Straight line method. 150 divided by how many years? What is the property? They say for it is for how many years? Point number 1. It is for how many years?
25 years.
25 years.
years.
It comes to how much?
6.
6,000.
No.
15 to 20.
What, see, read point number 1. Read point number 1. Hussein, everyone read. Everyone read.
Yeah.
Hussein, you read loudly.
Property include land at cost of 50,000.
Huh.
The booking is bring depreciation on the straight line method.
Good.
Brains over estimate useful life of 25 years.
Okay. Now, I will make it little bit more simple. Okay. I will make it little bit more simple. Okay. 1 minute. I will make it more simple. Is it right? It is what it says. Is it? You have the land. Is it right? You have the land. You have the buildings. Okay. You have the land. You have the buildings. How much is the value of land? 30,000.
30,000.
Buildings will be how much?
Building will be 120.
Good. Okay, building will be 120. Fine. Now, on the land you will have depreciation?
0.
0. Never. Never land will not value, will not depreciate. On buildings, what is the depreciation you are having?
4,800.
38. 38,400. What is the accumulated depreciation? 38,400. Okay. What is the accumulated depreciation? 38,400. On this 38,400, that is what it says. The property includes land at a cost of 30. The building is depreciated on straight line basis. Estimated life is how much? Now, when you are talking about the depreciation, you have to mention very clearly that depreciation is with respect to what? The depreciation is respect to buildings. Okay, this is where ACCA tests us. Understand point? This is simple concept. People, what we have also done the same thing. Immediately we will not read land. Land, on land we should never ever calculate depreciation. Buildings, how much is the buildings? 120,000. 120 divided by how many years? 25 years. How much you will get?
4,800.
4,080. I will do very slowly. The moment I will speed up the things, even I will cannot be in a position to explain you. Very simple. Now, what happens to plant and equipment? Okay, what happens to plant and equipment? Plant and equipment is returned on value. Okay, plant and equipment is returned on value. When we say returned on value, what is the amount is there? 176,200 minus 48,600. It comes to how much?
127,600.
127,600 times 20%.
25,520.
How much?
25,520.
25,520.
Yeah, 25,500.
Okay? Okay? Now, how much you will have here?
Land 30,000.
30,000. Good. Next.
Yeah. 76,800.
76,800.
Uh, 102.80.
102, 80.
80.
Okay? This is what is this is a carrying amount. Okay, this is what? This is the carrying amount. How much we have calculated depreciation? Depreciation we have calculated 4,800, 25,800. Is a depreciation. Now,
Yeah.
write separately depreciation buildings. Is it a depreciation buildings 4,800? Is that depreciation buildings 4,800? Depreciation plant and machinery how much? Depreciation plant and machinery. Depreciation plant and machinery is 25,520. Is it okay?
Yes.
We have done this. Point number 1 and point number 2. Okay? Point number 1 and point number 2. Slowly. Point number 3. What is there in point number 3? The balance on plant and machine equipment. Whatever the balance in the plant and equipment included a piece, a part of specialist machinery. How much? 70,000. Okay? 70,000 machinery was there. Is it? On 30th June, when it is from 1st July, it is on 1st July 2005. What is the value? 70,000. Now after 2 years, 30th June 2007, okay, how much is there? A forklift truck reversed into machinery, causing severe damage. Something happens to the machinery. How much? 70,000 machinery. Fine. Now something happened and machinery get destroyed. Okay. Interesting things. Okay. A potential buyer, somebody who has, we have located, who has indicated that she will pay 80% of the carrying amount. How much is the 80% of the carrying amount? 70,000 into 80%, how much? $70,000 into 80%, how much?
65,000.
She would pay 80% of the carrying amount at 30th June. Okay, 80% of the carrying amount. However, she has insisted that the machine is repaired before she buys. The repair work will be done by Hume employees and it will take how much? 120 hours of skilled labor And what is the labor cost is how much? 2160. $2,160. Okay, now how much he is going to pay? She will pay 80% of the carrying amount. Understand my point? How much you are going to pay? 80% of the. What is the carrying amount? Tell me now. 80% of the carrying amount. Tell me.
56,000.
First, see, is it? 1st July 2001. First you have to calculate depreciation for year 1. Is it right? Year 1 at the rate of 20%. How much is there? Reducing balance method. How much is there? 40,000, 14,000. Reducing balance method. Okay?
Yeah.
Now,
Okay.
how much you will get? You will get 56,000. Is that depreciation? Year 2, reducing balance method. How much? 20%. 56,000 into 20%. It comes to how much?
11,200.
11,200. How much you will get here?
Uh, 2,240.
Allah Kareem. 56,000 into 11,200.
50 is a minus, yeah. 44,800.
44,800. 44,800 is what? 44,800 is the carrying amount. Got my point? 44,800 is carrying amount. Are you clear about this?
Yes, doctor.
Is it right? Write down here only. Write down as working note 3. Okay? Write down as working note 3. Nothing will happen. Okay? Write down as working note 3. Okay? Now see the things. What she is saying, she is also very smart. A potential buyer has been located, indicated that she will pay 80% of the carrying amount. Is it right? How much she will pay? She will pay 80% of the carrying amount. Fine. She will pay how much? 80% of the carrying amount. I am continuing with this only. Now, what is the selling price it will be? Selling price, is it right? Write down in the working 3 only. Selling price is how much? 80% of carrying amount. It comes to how much? I am writing here, okay? Where any doubt, ask me. 44,800 times 80%.
35,840.
35,840.
35.
Okay? Sorry. Okay?
Yeah. 30.
35,840. Are you understanding? I am very slow.
Mention the
Huh.
yeah, Mr. That selling price. It's mentioned the question that we have to calculate, or directly we have to calculate. Where is it?
No. See, a potential buyer, somebody is going to buy, who indicated how much she will pay?
80%
80%.
of the carrying amount. All right. Okay.
Okay? 80%. Any doubt, ask me. Very important. Now, but what is the some more complications are there? They say that if we want to do this, they have to pay, you see, you cannot sell a machine like that. They have to pay delivery cost, okay? Sorry, they have to pay some labor. They have to do some thing to make it saleable, okay? They have to repair it, minus repair cost is how much?
120, no. Take about 120 hours.
See the things. See the thing. However, third line, she insisted that the machine is repaired before she buys it. Means if you want to sell the machine, I have to repair it, then I can sell it. Then only she will buy. She will not buy without repairing. Okay? She will not buy repairing. How much is the repair cost? Repair cost is how much? 2,160.
160. Yes.
Now, she is having so many conditions. Good, okay? In addition, we have to deliver the machine to the buyer. Isn't it? We have to deliver. And how much is the buyer cost? Buyer cost is how much? 2,100. And there will be a single premium. Insurance also we have to pay. Deliver.
580.
It is a general, we have minus delivery cost. Minus delivery cost. How much is the delivery cost? 2,100.
100.
Minus insurance. I will ask very important question after this total. Be ready for that. Okay? 580. Okay? 580. What is there? How much you will get this? Tell me.
35. Uh, 31,000.
31,000. This is called as anyone.
This is working 3 for number 1, right?
Yes. Working 3 for point number 3.
Point number, yeah.
This is called as $31,000 is called as net realizable value.
NRV. NRV here.
We think that, see that this is interesting part. We think that it is something related to trial balance. No, it is not related to trial balance. ACCA people will not give so easy marks. They are asking us to know what is the impairment, what is the net realizable value. We have calculated carrying amount, we have calculated net realizable value. You see the things. Point number, are you clear about this?
Yeah, doctor.
Is it right? Yes, Hussein. Okay?
Is the clear?
Yeah, you know, carrying amount, you have net realizable value. Now, what you have to do, we see there are three, always you should have 3 variables, okay? We cannot work with 2 variables. We should have net realizable value, carrying amount and value in use, okay? Value in use. You see point number 3.2, repair the machine and continue to use it. You repair and don't sell, is it right? Don't sell, continue to use it. It is nothing but value in use.
Value in use.
Okay, continue to use it. Is it? The financial controller estimated that the present value of cash flows. Is that what is value in use? Present value of cash inflows and outflows. Okay. from the future use including the repair is how much? 31,800. How much is value in use? Value in use is how much? Value in use is 31,800. Is it? Value in use after, once we have done, today, tomorrow, any time, I'm not saying any time, revise this question. Okay, revise this question, especially, okay, value in use is how much? Now, from this, what we can come across, what we can calculate from this?
Impairment
Impairment. Good. How much is the impairment?
800.
Impairment is how much? Carrying amount is how much?
Carrying amount 44,800.
Carrying amount is how much? 44,800. Okay.
100.
Now, which one we will use? Whichever has the greater value. Which is having greater value? Value in use or in net realizable value?
Value in use.
Value in use. Okay, whichever is greater value. Value in use. Okay, how much is value in use? 31,800.
100.
How much is the impairment?
Uh, 13,000.
Almost you have done 6 marks. Trust me, 2 marks for carrying amount, 2 marks for carrying amount, no, net realizable value 2 marks, impairment 2 marks, and value in use and carrying amount 1 mark, 1 mark. 6 marks. Is that you have done 6 marks? Understand what? This much is. Are you clear about this?
Yes, doctor.
Now, where we are going to show impairment? Where we are going to show impairment? We are going to show impairment in the where we are going to show impairment? We'll show impairment in the cost of sales. Is it right? Minus impairment. Impairment, okay? Impairment. Impairment. How much? Working 3. How much is the impairment? 13,000. Is it right? Is it 13,000? Yes, 13,000. Okay? Total it comes to how much? This is revised cost of sales. How much?
1,6 minus
253,920. Impairment for what? Impairment for plant and equipment. Okay? Plant and equipment. Is it okay?
Okay, doctor.
Now, well, last one. With this, I will stop. Okay. Now, you have the value has been decreased. Is it right? Minus impairment. Is it minus impairment? Working 3. How much is the plant and machinery? How much the value has been decreased? 13,000. Is that how much it has been decreased? 13,000. How much we'll get? 102,800 minus 13,000.
Um,
102,800 minus 13,000. 102,080 minus 13.
89,
How much?
89,080.
89,080. Fine.